Good morning. It is another week that flies by. We're November 8th. The corn market was down 4 cents this week. Soybeans up 2. Looks like there was nothing happening in the grain market this week, but that would be a mistake to assume. Soybeans actually fluctuated up 40 cents this week, and we had a 30-cent down day, another day, and we ended up with just 2-cent gains in the January contract, but there was a lot of movement in between. Soybeans actually blew through the 10.70 and $11 resistance in the January contract, ran all the way up 11.30. Now that 10.70 and $11 becomes support, but we definitely have a bull market in place, and so these numbers are a little bit deceiving. Chicago wheat was down 6 cents. China bought wheat this week, but the market calls even that a disappointment because it wasn't enough wheat. But China always buys in waves. So the Minneapolis market up 5 cents. Actually, Minneapolis and Chicago were within 1.5 cents on the, I believe it was Wednesday close on the market. And Minneapolis gained about 15 cents on Chicago after the Chinese wheat purchase was disappointing. Live cattle continue their downtrend, down $8.32 this week. Feeder cattle down $12.32. Those markets definitely look like they've topped, and the faster you sell it now at this point, within reason, with some timing, probably the better off you will be. Gold up $13, silver down just 0.017 cents. Those have not dropped off the edge of a cliff like the live cattle and feeder cattle, so it's still questionable whether that head and shoulders top is going to hold. Let's look at the markets. We've got weather and other related things. The weather forecasts are turning a little wetter in the Corn Belt in week 2, but one more week of relatively warm, dry weather probably is going to mean about the end of harvest anyway. Corn market, after its downtrend, we actually had this is a 1 year chart. It's not just been a 1 year downtrend into August, but we probably had a downtrend for 3 years. August probably bottomed that. You almost got a head and shoulders bottom, a left shoulder and a right shoulder here. And the market did break to new highs, which it means it's in an uptrend, but this week just sideways mostly trade. I thought this was a good place. 430 or so in the December contract was a good place to be a buyer of corn. Many people sold corn in anticipation of harvest pressure in this big 190 bushel corn crop. Actually, that did not materialize. Corn actually was at 430 way back in September, rallying already on the disease rumors and the Pro Farmer Tour and all those other things. We're actually right back to where that was. I think we know now that the corn crop was not as good in about half the country as we expected. I think half the country probably had a record yield on the lighter soils where it was and where it didn't have excessive rain and disease, but actually the half of the country that didn't have very good yields, disappointing yields, was most cases in areas that got more rain than normal, and they also got disease and other things, and the soil was heavier, so that excessive rain became a problem. Certainly that's the case in North Dakota and Minnesota. So probably be a buyer of corn, buying back corn. We made a recommendation this week. If you sold corn in anticipation of harvest, probably time to buy it back here at 430. Can we drop down to 420 again? Yeah, certainly that's possible. But if you sold some grain, obviously seeing what's happening here in the soybean market, where soybeans have exploded higher to a new yearly high. Well, we've been sideways most of the year between 980 and 1080 in the marketplace, and we just broke out of that range, definitely forming a bull market. And what's even more interesting is if you look at a 30-year chart in soybeans, and you see where that whole past year was between that 980 and 1080 and how we broke out of that range, the possibilities are big, but you have to have a realistic expectation. Here we had a consolidation. We popped up into the $12, maybe a next resistance, probably around 14 on these major charts. So now that we broke out, you do have to have realistic expectations. We're not going to go to $18 soybeans this year, but we very much could go to $12 soybeans or even up to $14 soybeans late this year. We're going to have to run through the $12 area first, of course, but you can see there's certainly sometimes there's periods of significant consolidation after being low prices for a year or more. And that's exactly what we had. We built a great base to rally from. There's no question in my mind we're going to rally. And in the next 2 or 3 years, we're going to see much higher prices. But that's not going to necessarily be immediate. It's going to take some time. So just make sure, if you have objectives for soybeans, I think the $12 to $14 area is a realistic objective in the coming year. We're going to need to sell some of those soybeans and brew product. And those are probably the levels you want to do that, not 18, 16, or $18 objectives. Okay, 16 and 18 probably will happen in the next 3 or 4 years, but it's going to have to be triggered by some event. And, at this point, we're probably not looking at that kind of price improvement, but we will be looking at price improvement because the trend is up. Here's the wheat contract, Chicago wheat, and we certainly broke out of that downtrend. With the big rally, we actually rallied from, 480 to, 555 or something like that. So a pretty good rally here in just a month, but a significant setback here these last 2 days. Supposedly the disappointment in the Chinese sales. I think there's people spreading Minneapolis wheat. 2 days ago, Chicago wheat was only a penny and a half below Minneapolis December wheat. And I think people are buying Minneapolis and selling Chicago. At least the smart money is, because Minneapolis has had as much as a $10 premium to Chicago wheat, usually running, 50 cents to $1.50 premium. And certainly that makes sense to me. So here's that spring wheat market. Looks like the dog that, nobody loves right now, because barely, recovering, still looks like it's in a downtrend. But you can see what's happened in the other grains, and that is not going to last very long. So here's the markets that probably look like they've topped. The live cattle bouncing down here, initially dropping 10%, having its 30% recovery where we recommended selling it, and now a new recent low here. So, you've got a new low. How low are we going to push this? And then you're going to have to look for a 30 to 50% recovery from that level. So then that'll be your next sell point. But as you play this downtrend out, there'll be opportunities to sell, but certainly not immediate. Let me pop this back up. So and the next chart is the feeder cattle. Feeder cattle bouncing significantly lower here. I think it dropped actually like 15 or 16% from the high down to the low, basically 380 down to 320. You got a little recovery, about a 30% recovery, where we recommended pricing it. Certainly any unpriced feeder cattle, you cannot take this kind of risk. And certainly it looks like with the new recent low, we're bouncing down. Now let's say we drop down to 300 in this push lower, and a 50% recovery would be at the 320 mark. 30% recovery would be somewhere in this range. And, you're going to have to sell this downtrend. And that means that those price targets are going to get lower and lower as time goes on. Another market that we thought had topped, certainly dropped enough, 10% like the live cattle did. We got a recovery, barely got up here to the 40, 50 area. Not a very good recovery really to sell. But look at this right shoulder, the left shoulder, head, and this right shoulder is playing out. Maybe the gold hasn't topped. There certainly are problems. And in the U.S., they have a tariff case in front of the Supreme Court. Unfortunately, they heard the case. Many people think that they're going to revoke President Trump's authority to use tariffs. I kind of doubt that. The Supreme Court is pretty much it's a weak body. It's a liberal body. All attorneys are liberal in the country today. And they might want to trim Trump's powers, but the problem they've got is Congress did authorize, in cases of emergency, the president to have that power, whoever it might be. Congress has the authority, yes, but they granted that authority to the president in emergency measures. And actually, I think that they're going to strike down a little bit and then, say there are limits to that power, but they're pretty much going to leave most of that power in place because it is an emergency in the U.S. We're bankrupt. That's why gold is rallying to double its previous highs and now wondering where we're going to get that response. But we're not going to get that response from the Supreme Court for months because the Supreme Court is like everything in bureaucracy, slow, inefficient, and if you have to depend on the Supreme Court to make things work, you're in big, big trouble. But anyway, you've got the gold market, potential recovery. Gold could recover all the way up that 4,200 range, which I think is resistance. That represents the doubling of the previous all-time high of gold. In the past year and a half, it did that. So I think the gold market could definitely be topped yet, but we haven't seen that drop to new recent lows like we have in cattle, fat cattle and feeder cattle. Silver, same thing. That right shoulder is getting long after running to the new or 50 to a new all-time high and through that $50 resistance. I think selling it at the 50, right under $50 is still a good play, but you have to have a stop above this previous high because it's possible this is not an all-time high. The U.S. financial system is still in big trouble. We're still shut down, the longest government shutdown in history, and Congress is still inept, basically, to solve our debt problem. What they really are shut down for is they haven't voted to increase the debt and put your children and my children further in debt in the future because they can't stop spending like drunken sailors. And they just love spending your money and using your money for their causes. And that's doesn't seem like that's ever going to end. And that's exactly why gold and silver are at all-time highs, because the United States has 38 trillion in debt and in big trouble. If interest rates go to 10%, like there was a risk of it under the Biden inflation, the United States is bankrupt and will have to default on their debt. So that is an interesting problem. So we have a situation in the grains there where they have broken out in soybeans. Corn has broken out of its downtrend. We don't have as good a yields, although USDA is going to tell us in November, God, they just can't stand that they can't put out a report and provide certainty to these markets, maybe shut down the market rally, because information lowers prices. Uncertainty raises prices. Even the university people, even though their research and theorists know that's true, the university people are all reluctant to believe it because they don't want prices to go too high. My God, that would be bad. So kind of like the way cattle have done. So anyway, it looks like the USDA is going to give us some numbers in November. And of course, they're not going to drop the yield from 53.5 in soybeans to 51.5 or 52 right away. They're going to drop it to 52.7 or something like that. They're never going to go all the way until January, or maybe they'll even have another revision since they missed the October report, so that they can get down to that 51.5, 52 that actually is in reality there. And in corn, they're not going to lower it from 187 to 182. They're going to lower it to 185 or 186 or something like that. And it's just a stepping stone, basically, to get to where they have to be. But they're not going to make prices go higher. The market is going to take prices higher. USDA is going to be a follower like they always are. So this bull market is just emerging. You're not going to run to $18 soybeans in the next 6 months. You have to have realistic price objectives. We have a bull market there, though. And, we have advised buying back a lot of grain. Right now, the cheapest market out there is probably Minneapolis wheat. Holding just now a 15-cent premium over Chicago, but not nearly enough, not for historic purposes. Hope you have a great weekend. We got a lot to look forward to in the grain side, I think, and good marketing.